I guess that wasn't the case for MB Capital.
No, it's not the case for us. But the thing is, for example, in Iceland stock like a Vietnamese, we have on one hand the government still owning over 50%, and the rest is belong to all the foreign institutional investors. So that's why you see a little liquidity in the market for Vietnamese. So even for local fund managers like us, if you want to get a position in Vietnamese, you just have to actually collect shares on a daily basis, which is not in our interest to do that.
More aggressively.
Yeah.
And which one do you think were more disappointing for you? Wouldn't it be
in
property?
2010 years, property and banking are the two most negatively impacted by the different regulatory things going out there. In banking, as we mentioned before, there's a tightening policy from the government, increasing capital requirement that impact the bottom line of the bank. On the on the property, you have the two pieces of very important regulations, the Decree 69/71, trying to curb down the speculation in the market. That's also negatively impact the bottom line of property companies. So therefore, you've seen in the second and third quarter of this year, share price of banks and share price of property companies are actually going down more dramatically than the market itself.
All right, so let's move on. Compared to other markets in the region, say Philippines and Thailand, maybe the most close to us, how do you think that the Vietnamese market has performed?
Very poorly. The Southeast Asian emerging markets, Indonesia, Philippines, Thailand, Malaysia, have all done extremely well. They have very strong currencies because they've had significant foreign inflows of cash, and the currency is appreciated, and the stock markets have gone up 50% this year in US dollars. Whereas we've had no foreign or very limited foreign participation until recently, no significant inflows of foreign cash, and people are focused more on the macro situation plus all the other problems we've already discussed, and so Vietnam has had a very poor year in comparison.
Mm-hmm. How about you? What do you think?
I mean, the same thinking. Yes, we've been, probably Vietnam and China are the only two markets that lagging behind the whole region here. One of the things I see is there's a eroding confidence from the investors globally into Vietnam, and also there's another disadvantage when we look at Vietnam and other regional market is the size of our stock market. We only have like a market capitalization of about 35 billion US dollars, which is about 1/10 to 1/9 of other regional markets. So with that size, normally you are off the radar for big institutional investors.
Unless you're the tiny frontier markets,
yes,
like Mongolia, which has a market capitalization of less than $1 billion, is up 160% this year. Yes. It doesn't take very much to move that smaller market up. Whereas here, when we have a very narrow investor base, which is mainly obviously if it's 5%. Only 5% foreign, it's 95% domestic, and that tends to be retail, and it tends to be very short term. And in order to get significant moves in markets, then you need a much broader investor base. We certainly over the last 2 months have seen signs that it's that foreign interest is increasing. Foreign is up to apart from the blowout day last week with $85 million in income from foreigners on a single day, but roughly over the last 2 months, foreign participation has gone from 5% a day to 15%. And if we keep seeing that and a broadening of local interest, then I think we're looking pretty well set for next year. I think, and I hope.
Right.
Thinking about that theme as well, it kind of goes back to some of the issues that we've had in 2009, such as the mandates for banks to increase their charter capital. Yes, it adds a lot more supply into the market, but in turn there's a much longer term benefit, which is the increasing size of market capitalization. Hopefully, if we can get to a stage in which we're near the 50 billion mark, that qualifies us as more of an emerging market, and by increasing the market capitalization, that does help a lot. Also, another thing that I've seen from a really great indicator is going back to your net asset value, the NAV for some of the funds. And having the opportunity to talk to a lot of funds, I've seen that many of them, for example, have underperformed. And they are actually now looking at new approaches and new strategies, demanding more from sell side as well to provide quality information and quality research and quality investment opportunities. So essentially it goes right back to that whole theme that I've been trying to highlight for 2010, is that let's have all the bad come right now and try to resolve that this year, and try to move forward with the market with a much clearer understanding of where our market is, what we can do to improve it, and the steps towards improving it.
Okay.